Now, back to It's About Business with Shannon Pearson on AM650, the show where business owners share their success stories. Now, here's Shannon Pearson.
You're listening to It's About Business on All Time Favorites, AM650. I'm Shannon, and I am joined in the studio by Bryan Slusarchuk, Chief Executive Officer of Tirex Resources. Hi, Bryan.
Hi, Shannon. Thanks for having me in.
Well, it's great to have you. You are an expert in your field. You're in the natural resource sector.
Yeah, absolutely, Shannon. And several years ago, I'll tell you, there weren't too many people interested in interviewing anybody from the natural resource sector. It was one of those sectors that was overlooked by the general investment community. But with the financial mess that many sectors are in right now and parts of the economy, more and more people are becoming interested in hard assets. And copper, gold, silver, zinc, those are hard assets that people are becoming increasingly interested in.
So nice, tangible stuff you can reach out and grab?
Yeah, absolutely. And we've seen that not only in the mining space, but also in other spaces such as agriculture, lumber, etc.
Okay. So your background, you've been in this industry for roughly how long?
We purpose-formed our company, Tirex Resources, in 2006.
Okay.
Prior to that, I spent several years financing exploration and development companies. And as you might remember, in 1999, 2000, 2001, that was a tough go. As I said, most people were more interested in what the next .com success story was going to be rather than companies that actually had hard assets.
Absolutely, and it was a bit of an anomaly, if I remember correctly, in the tech world.
Well, absolutely, and I think that people during that .com era or the tech era, we saw what really was a classic bubble.
Yeah.
And that bubble scenario was predicated on a whole bunch of capital coming into ideas without the revenue or earnings to back up the valuations.
So it was somewhat more conceptual as opposed to the hard assets that you're referring to.
Absolutely, and over the course of time, we've seen assets like gold hold value, act as a store of wealth, whereas these conceptual companies just simply didn't justify the valuations they were being granted.
Okay. So again, going back to the natural resource sector then on whole, you've been involved with it since the late 90s, you think? Is that a fair estimate?
Yeah, absolutely.
Okay. So late 90s, you kind of rode out the bubble, and then we come into, say, 2001, 2002 in the markets. And I remember that time because I was actually working in the industry and kind of actually just entering the industry and getting a real good idea of what not to do, I think is probably a fair assessment. And then came the upsweep. So from 2002 onward, things started to kind of gain some momentum with tech kind of being left behind.
Sure. What we saw in the late 1990s, in the midst of the whole tech bubble forming, we saw good mining groups, good hard asset groups accumulating resources at real undervalued levels. Nobody was interested in gold, copper, zinc, silver, so there were some real values to be had. Mm-hmm. We saw that accumulation of assets by well-established companies into the 2001, 2002, 03 period, and then gold started upswing as the U.S. dollar started to correct. And what emerged in 2004, 2005 were a number of companies that all of a sudden were very prominent because of the assets they were able to pick up cheaply when nobody was interested in the sector.
Nice. So the sector, and we can even actually go back further because now I've started to think about things like, companies like Tirex that hit Vancouver markets pretty hard. People that have been in the business for a long time got kind of sideswiped by those types of events. So of course they shy away from natural resource sector. Take a look at tech. Tech blows up. Now they're going back 2004, 2005 with a bit of a new attitude, perhaps even a new culture around natural resource.
For sure. I think that the late 1990s in Vancouver, and many people have bad memories of it, the whole industry was sideswiped, and it was sideswiped by a combination or a confluence of negative events. You had the Tirex scandal that in 1996, 97 started to take the wind out of the sails of the market in a hurry. At the same time, you had falling commodity prices. So by the end of the 1990s, good projects, bad projects, projects in the middle just couldn't get financed. So a lot of projects came up for grabs here, and smart companies started to accumulate those assets. And it's the classic story of accumulating good assets when nobody else wants them. And as you know, Warren Buffett, who's probably the most famous investor in the world, said that he buys when everybody else wants to sell and sells when everybody else wants to buy. And that's very difficult to do, but it was very clear in hindsight that the late 1990s into 2001, nobody wanted to touch mining companies. That provided a big opportunity that I still think exists today.
Fantastic. Do you see history repeating itself a little bit?
I don't see a typical bubble as of yet in the mining industry whatsoever.
Good.
And there's not the froth out there that you normally see in a bubble environment. Anecdotally, I always think that you should be exiting a sector when your taxi driver or your next door neighbor starts to tell you what you should be buying within that space. And we very much saw that in the dot-com era, where everybody all of a sudden was a dot-com expert.
Oh yeah, the neighbor's dog's sister's cousin gave stock advice.
Well, absolutely, and we don't have that in the mining market at all. And in fact, what we've seen over the past 2 years has been a very big disconnect between the actual commodity prices and the prices of the shares of the publicly traded companies that are in the sector. So while copper, gold, silver have run and are at much, much higher levels than they were 5 years ago, we haven't seen the share prices perform the same way.
Oh, okay.
In particular, the last year has been very strong in the commodity market, but share prices of commodity companies are actually down for the most part. And I think that disconnect is where there's a big valuation opportunity here.
Okay, so once it kind of catches up, there's opportunity to make some money.
Yeah, and I think that there's no doubt that the gold companies are in better shape than they were 2 years ago. There's no doubt that the copper companies are in better shape. These companies at today's commodity prices, with gold over $1,600 an ounce, with copper in the neighborhood of $3.50 a pound, these companies are printing presses for money right now. Their earnings are incredible, yet many of these companies are trading at lower share prices than they were a year ago.
So it's a hold scenario.
Yeah,
just hold on and wait.
I think that at some point you're going to have that disconnect closed, and you either have that disconnect, that gap, closed via the commodity prices coming way down, or the share prices moving way up. Given the fact that the U.S. and almost every other major economy in the world is printing money like it's going out of style, there's no doubt in my mind that real assets like copper, like gold, are going to go higher.
Excellent. We're talking to Bryan Slusarchuk, Chief Executive Officer of Tirex Resources and an expert in the natural resource sector. We haven't really brought the conversation about markets to It's About Business, so I'm pretty excited to have you on board. It's a great conversation. I think it's necessary because you got crazy things going on out there, and you have somebody that's maybe, looking at retiring in the next 10 years, and they turn on their TV, and there's ridiculous commercials about sell your gold, get a great price, and then they have perhaps a portfolio with a little bit of exposure to the natural resource sector. And I mean, there's a lot of contradiction out there.
Well, and we've seen it in the mining business over the past 10 years. You regularly, 10 years ago, had analysts from major banking firms on television talking about the fact we would never see $600 gold, $700 gold. Now these banks are starting to look at gold as a core part of a portfolio. A well-known analyst was on business television several years ago and said not only would he not see $600 gold, but his grandkids wouldn't see it.
Oh.
And he was proven wrong in a matter of months, and today we've got gold at $1,650 an ounce. And I think what people need to realize is that the monetary system in the world is flawed right now. The governments who are scrambling to deal with economic crisis that we see all over the place are scrambling to print money and inflate their way out of the turbulence or the possibility of a deflationary environment. So as that inflation occurs, you have the reverse impact on commodities. As more dollars are printed, you see more actual value being created within copper and gold. And it comes down to the fact, if you're a Chinese individual in the Chinese government, do you want your agency to have $3.50 in US dollars right now, or do you want a pound of copper? I think most of those individuals would answer they would rather have a pound of copper. Mm-hmm. And we're starting to see that money, the value money, flock into natural resources and hard assets.
Well, it's an international currency.
It is. Gold's very much been an international currency, not just for the last 100 years or 500 years, but for thousands of years. And gold is a store of wealth. It's a hedge against other movements in the general economy. They can always print more paper. They can print more paper currency, but you can't print more gold. And the other factor that people don't realize in the general public is that it takes a long time to bring a mine on production. So if gold goes from $600 to $1,650 like it has, or copper moves from 60 cents to $3.50 a pound like it has, you can't decide to open up a copper mine tomorrow or a gold mine tomorrow. Mm-hmm. It takes many years, a lot of hard work permitting. It takes, first off, the discovery of the new resource, and what we see is more and more mines are shutting down because they're at the end of their mine life. They've been mined out, mm-hmm. but very few new mines, relatively speaking, are coming on to make up for that supply-demand gap.
Oh, so what I was just going to say, it's creating a supply and demand conversation that's just going to be brilliant, because we've never been there, have we?
We've never been in this particular, this exact environment before. But I do note that it's always risky to say this time is different. I don't think this time is different. I think what gold is doing is reacting the way that it's always reacted in times of economic crisis.
Great. Thanks, Bryan. Again, we're talking to Bryan Slusarchuk, Chief Executive Officer of Tirex Resources, and we're going to be right back and talk to him a little bit more.
Do you have a question for Shannon? Go online to shannonpearson.ca to strike up a conversation. This is It's About Business with Shannon Pearson, where business owners share their success stories. There's a lot more still ahead on AM 650.